Are you there?
Yes, I'm here. Can you?
We've started and we'll get things underway, but I think Scott just lost his internet as we get things going. We can't see you, but we can hear you. So hopefully your picture comes back. Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us, as always, is University of Missouri's Scott Brown. Again, while we can't see you, we can hear you. Good afternoon, Scott. Oh, now we can't hear him at all.
Good afternoon, Megan. I apologize for a little bit of spotty internet here. I'll come back here as we go.
Let's go, if you want to talk while you're trying to troubleshoot at the same time, let's recap what happened this week in the markets.
Yeah, if we start on the cattle side of the equation this week, live cash cattle markets were nearly $2 lower this week. Those feeder cattle markets were steady to $6 lower on the week. If we look at the futures side, the October live cattle futures contract closed down about $1 this week, and the October feeder cattle futures contract closed down nearly $2 this week. On the box beef side of the equation, choice box beef prices were down about $2.40 this week. On the hog side of the equation, cash barrel gilt prices were $1.60 higher this week. We saw some pretty strong lean hog futures contracts with that October contract up $5.80 on the week. The pork cutout value gained this week up $3.40 on what was pretty strong ham and belly prices for the week.
It was nice to finally see some movement and some stronger cash hog prices. How much of that, Scott, could have been related to maybe a little bit more aggressive efforts ahead of this long holiday weekend?
So perhaps, and I think some may be seeing that we're slowly getting ourselves worked through some of the backlog of hogs that we've talked about forever. I don't want to suggest that we've worked through all of them, but moving ourselves in a better direction relative to what we've seen for a while. That's for sure.
Scott, we'll get into a couple of the things that we have coming up in a little bit. If for the folks that might be watching us on Facebook Live, if you have a question for Scott, you can submit those as well. Just ask them in the comment segment and I'll do the best that I can to filter through them. Scott, you mentioned working through that backlog of hogs. As we take a look at the slaughter numbers for this week, what does it look like? And is there any surprises as we look at those numbers?
Yeah, so as we look at what USDA is estimating for this week, so cattle at 633,000, that's actually 21,000 lower than a week ago. I think as we think about this Labor Day holiday, that may be factoring into what the runs are going to look like tomorrow. Hogs at 2.484 million head, also 173,000 below where we were a week ago. So both those numbers are lower. And again, I think the Labor Day holiday is having some impact there. So hopefully we'll get some bounce back, and we need to continue to run some fairly large runs of both cattle and hog slaughter as we try to finish 2020.
Scott, as we take a look at not a ton of reports for us to get into today, let's start with the Restaurant Performance Index and a slight improvement over the previous month.
You know, that's right, Megan, which is good news for us. You know, if you look back at April, we had an overall index of 94.9, and the July numbers came in at 97.1. That decline in those April was certainly the worst of COVID-19. And you look at the July number of 97.1, up 0.7% relative to where we were in June, is some good news. And for me, when I look through some of the data, the current situation index up about 1.5% over where we were in June, driven by stronger same-store sales and increased customer traffic. But both of those, to me, bode well for us in terms of demand for beef and pork as we look ahead.
And definitely good news, as we know that production levels of beef and pork are continuing to rise.
Yeah, that's right. We got a lot of supplies coming, I think, for the remainder of 2020 for both beef and pork. And we need all the strength on the demand side we can get as we go forward.
All right, Scott, let's talk a little bit jobs report. Continuing to add back some of the jobs that we lost from the COVID-19 pandemic and the coronavirus pandemic. Talk to me a little bit about the numbers that we pulled for this August jobs report.
Yeah, so we got a report of 1.4 million jobs added in August. That was pretty close to pre-report expectations. That actually allowed the unemployment rate to fall to 8.4%. I think some might have viewed that 1.4 as somewhat negative when you realize that back in July, we added 1.7 million jobs, and back in June, we added 4.8 million jobs. So we're slowing the growth rate, but at least adding new jobs has to be seen as a positive. We still have a ways to go. If you look back at where we were in February, we've got about another 11.5 million jobs that need to be added to get back to those kind of pre-COVID levels.
Got the other big report this week, farm income for 2020. USDA released their figures. Talk to me a little bit about those numbers.
Yeah, so I think it actually surprised some of us with the level of overall farm income for 2020. USDA is saying it's 102.7 billion dollars. That's 19 billion more than what they estimate for 2019. So growth in U.S. farm income for 2020. If we backed up to the worst of COVID, I don't think anybody would have talked about higher farm income. Now, how is USDA getting us there? It's important to realize that government payments is making up a large portion of the growth that we see. USDA estimating 2020 government payments at $37.2 billion now. That's a nearly $15 billion increase, relative to where we would have been in 2019. So much of the growth in overall farm income can certainly be traced back to just the additional government payments that we have.
Scott, how does that break down when we look at it in terms of crops and farm incomes for livestock producers?
Yeah, if we look at what's going on, and again, USDA doesn't say, well, here's crop farm income or here's livestock farm income, but you can take some of the categories and I say take all the livestock receipts and things like purchase feed and purchase livestock, those are livestock expense categories. So you can get a little bit of an estimate. And I think there's a tale of two cities, if you will. So crop farm income looks to be fairly flat for 2020. Yet when you look at the livestock side, I'll say down about $15 billion from the 2019 level. Now you really have to go back to 2009 to find a year as low as 2020 appears set to be for livestock farm income. So it isn't, this pain hasn't been shared equally. And I think some of that could go back just to the processing issues that meat producers face generally, the shutdown of restaurants, et cetera, I think had more direct effect to the livestock industry than the crop industry.
Is that give us maybe some justification, or when we talk about the payments and the aid that was given to producers after some of this, does it kind of maybe make sense as you look at how those numbers break out then?
I think so. I mean, there's a reason why cattle is getting, a fair amount of the money. There's a reason why dairy, there's a reason why corn, all right? You may say, hey, you threw corn in, let's not talk about that. But the ethanol slowdown as we weren't driving, those are some of the industries that had more direct effects. We might not have ever thought about corn being in that, but when we all didn't go anywhere, it certainly affected gasoline and ethanol consumption to a great deal.
Scott, really, that's all we have for this week. As we take a look to next week, another fairly quiet week in terms of reports. What are we looking for next Friday?
Yeah, so we'll get retail prices, and we'll get another monthly report from USDA, which will be interesting to see what they do in terms of crop yields, as we've seen some dry weather in some parts of the country, and we've also seen some of the big impacts of the storm that went through Iowa. How those yields get adjusted will be important.
All right, Scott, hopefully we will see you then. Have a great Labor Day weekend.
Yeah, you do the same, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can also submit questions and comments there as well. And just a housekeeping note, we did have an update to our email newsletter system. So if you don't see it tomorrow morning, make sure to check your spam folder as well. Have a great weekend. I'm Megan Grebner for Brownfield.